Preferred stockholders have preference over common stockholders as to payment of dividends and assets in liquidation, and do not vote. The issuance of preferred stock is accounted for in a similar manner to the issuance of common stock. Stein Corporation issues 10,000 shares of $10 par value preferred stock for $12 per share. The journal entry includes an increase or debit to cash for $120,000, an increase or credit to the preferred stock for issued shares of $10,000 times a $10 par value of $100,000, and an increase or credit to the paid-in capital in excess of par preferred stock for the $2 in excess per share of $20,000. Just like common stock, preferred stock may have a par value or be no par stock. Preferred stock has the following dividend preferences. Preferred stockholders receive their dividends before common stockholders receive dividends. The per share dividend amount can be stated as a percentage of the par value or as a specified amount. For example, the dividend per share associated with 7% $100 par value preferred stock is $7 per share, calculated by multiplying the 7% rate by the $100 par value amount. If the stock is cumulative, preferred stockholders must be paid current annual dividends plus dividends in arrears before common stockholders receive any dividends. Dividends in arrears represent amounts from previous years where the company has not paid dividends to the stockholders. The stockholders' equity section of the balance sheet has three main sections. The paid-in capital section that reflects amounts received from the issuance of the stock, the retained earnings amount that represents mainly net income that is accumulated over the life of the corporation, and the contra stockholders' equity account treasury stock that contains the cost of reacquired stock. The first section of paid-in capital is the capital stock section. Preferred stock is listed first. The 9% is a dividend rate. The stock has a $100 par value, is cumulative, contains 10,000 shares authorized, 6,000 shares issued, as well as 6,000 shares outstanding. The $600,000 amount in capital stock is calculated by multiplying issued shares of 6,000 by the $100 par value. After preferred stock, common stock is listed. The common stock is no par but has a $5 stated value, contains 500,000 shares authorized, 400,000 shares issued, and 390,000 shares outstanding. The $2 million in the common stock is calculated the same as the preferred stock above. Issued shares multiplied by stated value. 400,000 shares issued multiplied by $5 stated value equals $2 million. Outstanding shares of 390,000 are calculated by 400,000 shares issued minus the 10,000 treasury shares. Adding the preferred stock of 600,000 and the common stock of 2 million results in total capital stock of 2,600,000. The additional paid-in capital amount of 1,030,000 reflects the amounts received at issuance over the par and stated amount. Total paid-in capital is the total amount received from the issuance of the company's stock and is calculated by adding total capital stock of 2,600,000 and total additional paid-in capital of 1,030,000 for a total paid-in capital of 3,630,000. Connolly has retained earnings of 1,058,000 as of the balance sheet date. Total paid-in capital and retained earnings is 4,688,000, calculated by adding total paid-in capital to retained earnings. Treasury stock is listed last. The cost of the 10,000 treasury shares of 80,000 is subtracted, resulting in total stockholders' equity of $4,608,000.